Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us. Let's first take a look at what happened on Friday. A weaker than expected US jobs data initially saw bond yields and the US dollar tumble before recovering, while global stocks began the month strongly. Europe's main stock index had its biggest one-day gain in 5 weeks. Now on Wall Street, the major indices did end higher, with investors buoyed by positive earnings results, although they remain cautious ahead of Tuesday's US elections. Amazon shares surged after reported earnings on Thursday that revealed strong retail sales, boosting profits above estimates. Apple fell on concerns about a decline in its China sales during its most recent quarter. Other Mag 7 stocks, Meta and Microsoft, also reported earnings last week and warned on AI-related infrastructure costs. And Intel shares jumped after a better than expected revenue forecast. In the oil and gas space, Chevron rose after the company beat third quarter profit estimates on higher oil output, and Exxon pumped a record 4.6 million barrels of oil equivalent per day in the third quarter. That's up more than 24% from a year ago. Well, US jobs growth almost stalled in October. Non-farm payrolls increasing by 12,000, much less than the 100,000 forecast, and the smallest gain since December 2020. Average hourly earnings rose 0.4%. while the unemployment rate held steady at 4.1% in October as more people left the workforce. And economists expect the data will have firmed the likelihood that the Fed will deliver a 25 basis point interest rate cut when it convenes later this week. US Treasury yields, they did initially tumble on that weaker than expected jobs data, but then the 10-year recovered to 4.3%. The 2-year fell to 4.14%. And the US dollar rose against the euro and rebounded against most other major currencies, with the Aussie now at 65.9 US cents. In terms of commodities, oil prices edged higher on Friday despite record US output, which weighed on prices, with reports that Iran is preparing a retaliatory strike on Israel. Brent futures up almost 0.5% at $73 a barrel. Copper rose more than 0.5%, while iron ore fell more than 1.5% to $102 a tonne. And the gold price weakened slightly to $2,736 an ounce, as some traders took profit after it hit a new record earlier in the week. And Bitcoin trading just below 69,000 US dollars. Let's get across what is moving global markets with a big week ahead of us. Greg Smith joining us from Devon Funds Management. Greg, good to catch up with you again on this Monday in what is a huge week, it has to be said. Let's first, though, start on your side of where you opened.
Hi, Andrew. Yeah, great to be here again. The market were down 0.3% at the moment if you look at the NZ50. Pretty quiet on our front announcement-wise, but obviously lots of interest what's happening overseas. We've got some data points. We've got the RBNZ stability report this week, which is their sort of semi-annual view on what the economy is doing. We've got another GDT print, and we've also got some labour force data, so that'll be interesting to see where the unemployment rate remains under 5%. But yeah, a lot of interest in what's happening overseas. We have had the Westpac results this morning, so those shares are dual listed, of course, up actually, 0.5% in New Zealand. So yeah, it was a lot of talk about if you look at the New Zealand side, impairments were up, but they sort of said that customers were still resilient. It was similar on the Australian side, of course, as well. And yeah, net interest margins moderated very slightly in Australia, but they're actually up in New Zealand, which was interesting. So yeah, that sort of got us off to start today.
Yep. All right. So that update, the last of the big banks to update. Greg, just stateside, of course, we're still in the midst of earnings season. Last week it was all about the Mag 7. What was your take out of what we saw there?
Yeah, it's been a bit more mixed, hasn't it? So we had numbers from Apple and Microsoft and Meta that sort of fell fairly flat, and I think for differing reasons, concerns over the investment, not necessarily the promise of AI, but the investment required. with Apple, those shares have had a good run, as have a lot of the Mag 7. Obviously, it was also interesting that Warren Buffett has actually been trimming his holding. I think he trimmed it by about 25% over the quarter. He's trimmed it by 2/3 over the past year, so done very well. But then on the other side, you had numbers from Alphabet which were very good, and also Amazon. And there was a bit of commonality there. You had really strong growth in cloud, which was slightly better than expected. And you also had digital revenues, or advertising revenues, should I say, coming through quite strongly on both sides. So that was actually a bit of I suppose, a vote of confidence in the economy. But I think overall, it's fair to say the earnings season has been a little bit mixed. That said, we've seen lots of companies outside the tech names engaging in buybacks. Had those big two oil companies, Exxon and Chevron, on Friday doing that. I think that's interesting. So bit of a mixed season, bit of a mixed picture, I suppose you'd say, of the economy, heading into the election tomorrow. And of course, we saw that with the non-farm payrolls. Obviously, the weather played a pretty big part in that. The lowest job additions or job creation since December 2020. So it's sort of a bit of a murky picture, I suppose, as investors go to the polls on Tuesday.
Yeah, it's uncertainty, isn't it, Greg, given those polls in the US election are just so tight. How do you view how the markets are responding to that? Certainly the betting market's still on Trump, but you look at the independent polls, that's less clear.
Oh yeah, and the polls, you sort of, as we know, you take them with a pinch of salt. So I saw that Iowa, which Trump sort of held the last two times, this appears to have swung in favour of Kamala Harris. So it's going to be down to the wire. It might be a little bit like the Melbourne Cup tomorrow. So time will tell there. But I think from the market's point of view, it'll be interesting. If Kamala is victorious, then it's sort of like the status quo. Whereas if Donald Trump gets back in, he is seen as being a potentially more inflationary president or administration. With tariffs, with tax cuts. So that's quite interesting. I'm not sure if that's sort of fully priced in as yet. On the other side, the market and the economy did quite well, sort of under his stewardship, as it were. So it'll be interesting to see how they react. I suppose what we don't want to see is another position where the result or the end result is debated and not really known until the new year. I don't think anyone sort of wants that. But it's going to be interesting. And it's also going to be interesting to see how the Fed reacts. Obviously, we saw that inflation gauge come in pretty much in line. So that's pretty much under control. Is it going to be still under control if we see an inflationary or more inflationary president at the helm? So that'll be interesting. But certainly the job numbers, we also had that PMI as well, definitely leave scope for the Fed to cut rates. Obviously not necessarily by 50 basis points, but certainly another quarter percentage when they meet later this week.
Yeah, as you point to, Greg, a huge week, certainly for central banks as well, because we do have the Fed, Bank of England, and also the RBA. What are your thoughts on where the RBA is going to take its policy expectations? It will remain on hold. It is all about the commentary, particularly in the wake of recent quarterly reports on inflation.
Yeah, that's right. As you say, it's sort of a little bit of an outlier, isn't it, amongst central banks? Inflation is above target. So that's the sort of the first black mark, if you like, in terms of the runway for any rate cuts. And then you've obviously potentially got longer term inflationary sort of moves, haven't you, with the federal government effectively pitching for the election next year with the student loan forgiveness. And the economy's sort of still running in pretty decent shape. So it doesn't feel like there's going to be any action tomorrow. Obviously, that's pretty much a given. But as always, it'll be with the language. With the Bank of England, it looks more like there's going to be scope for another cut this week in the order of perhaps quarter percentage point. And that economy is certainly facing some headwinds. Inflation is running at around target, and that seems to be pretty much the key determinant with obviously a lot of central bank moves. Is inflation at target or even below it? If so, there's that scope to cut, and I think that's the key difference of what we're seeing in Australia.
Yep, Greg. Well, enjoy the week. As I said, so much to consider. Thanks so much for joining us from Devon Funds.
My pleasure, Andrew. Have a great week. Bye for now.
Checking on where we're likely to open and looking for a positive start there. SPI futures up more than 0.4%. Stay with us because Nadine's going to take you through the open in just a couple of minutes' time.